Hey traders, welcome back to another Sunday video where we prep for the week ahead, and we like to go through chart setups together. We talk about things that seem most interesting to me, and then of course I also recap positions I'm in. Speaking of which, I am still in that S&P 500 trade. At this point, the trade I have between S&P and VOO, which they're both the S&P 500. You can see S&P up here, VOO, S&P up here. They're the same thing, just two different symbols. They're two different ETFs. But between those two trades, I am currently sitting up almost $23,000, which is a wild number. But I've just let this winner just keep running and running, and it's been fantastic. Now, I've been very clear recently. Before this, I had a pretty sizable drawdown going on in my account. And so this is a recovery trade. I mean, at this point, it's now nicely put me back into profit, land. But the point is, I've had to be really patient with this. And just because I caught this great move, I'm not trying to brag. I had a period of time where I had to really, truthfully, I had to really earn finding this position. Anyways, I'm still in those trades, and if I make any adjustments to it, just a reminder, I will be sharing them inside of the Discord. If you're already in there, then you've probably seen this trade from day one. It's been a minute here. We've been holding on to this trade for quite some time, but the VIP group is where you can see all the trades being shared in full detail. And heads up, as I just want to remind people as we kick off this video, our Black Friday sale is happening this week. So if you want to get access to the VIP group or to the Edge Finder, both of them, you can use the link and promo code down below in the description to get access to that Black Friday sale. Again, it gets 40% off the Discord, which includes Frank and I's trades as well as Ivan's trades. We have a live chat room for serious traders, and this is a quality chat room. I'm gonna tell you right now. You get people who are very serious about their trading who join the group. It's been awesome. We've really built up a community of wonderful people. So definitely highly recommend. Come join us, get that 40% off promo code down below in the description, and maybe we'll meet some of you guys in there soon. Anyways, I will continue to monitor this position on the S&P, and any adjustments I make will be shared inside of Discord. I think, truthfully, for those of you guys watching the S&P with me, what I'd like to see is I'd like to see a pop above this resistance point. This has been a big barrier for price. As you can see when we go, scrolling out, you look left. There's a good reason why, right? You take a look at, there's a big level of resistance around this 4,500 on the S&P, but it's SPY, so it's 450. But if we switch over to the SPX 500 view, you can see it's that 4,500 barrier, right? So 4,500 SPY just approximately is 10% of the price. So 450, so 4,500. But anyways, my question here to the market has to be, are we going to get enough strength here from bulls to push us higher into kind of a new wave higher, or is this thing due for a bigger retracement? I'm fine with a retracement as long as we don't break support, in which case I will trail out and take my profit on the position or positions between the two that I have. So now let's take a quick look at the DXY. This is the dollar index, and the dollar index just wants to keep falling, it seems like. And I think that this is a market that keeps going lower. Now, of course, I could be wrong about from here going lower because it's quite extended to the downside, but we've been really right about being bearish generally on the US dollar. Here is the daily chart, and you can see we had this upward channel, right? Then sideways channel, and now a pretty confirmed downward channel. Now, again, we are at the lower end of this channel. So if you're watching this, be very careful because, it's probably due for some kind of a bounce. Now, that bounce could be short-lived, but I think it's probably reasonable to say, hey, if you're in sell trades, if you're in a good position in this situation, my opinion would be, I'm trailing a stop on this thing and I'm letting it run. But if I'm not in a position, I'm going to try and be patient because that thing may be due for a retracement pretty soon. That would be at least how I'm watching the US dollar and how I am watching the US dollar. So that is going to be my bias, is looking for possible bearish setups on the US dollar going forward. Now, why the bearishness, Nick? Well, I've made this point many times, so please bear with me if you've heard me say this. But on this day, we had the Fed chair, Jerome Powell, come out sounding less hawkish. He shifted from being super concerned about inflation to saying that the risks of rate hiking are about even with the risks of not cutting at some point, right? So that was a very, very pivotal day, and it dropped the dollar from there. Then you had some confirmation data in the form of NFP. And then you had really confirming data with CPI, right? Inflation statistics ticked lower, showing, hey, we're seeing a victory in inflation in some ways. NFP jobs were staying relatively strong. So the idea of a soft landing is the idea that you can essentially see inflation problems go away, like cool down, and at the same time keep the labor statistics decent, right? You don't want everybody losing all their jobs, because if that happens, then you enter into a straight up recession. And if you want inflation to come down to kind of keep the consumer alive, right? Because too much inflation makes it so people can barely pay for anything, which is already arguably the case for a lot of people. But that is what the Fed is trying to accomplish with its rate hikes that it's done, and now kind of seems like they are done with that. So again, my bias for the dollar would be more downside on rallies until further notice. Now, I also want to take a quick look before we get into some individual charts at the COT positioning. And this is going to be really key this week, guys, because what we're looking at is this is the Edge Finder. If you haven't seen this before, it's our market data software that my company, A1 Trading, has built. We are a small company out of Atlanta, Georgia. We're a small knit team that builds tools specifically for traders who are interested in fundamental analysis. And we're working on some technical analysis tools as well. Stick around for those. But, smart money trackers. So let's look at this. So the COT net positioning, this shows us where overall money is positioned, long or short, by the non-commercials. Those are your big hedge funds and your banks and speculators in the market that have meaningful amounts of money. So big money is still short the yen, they're still short the CAD, still short the Swiss, still short the Aussie. Now, what do you mean still, Nick? Well, these positions move really slowly. That's why I always say don't pay too much attention to this first chart. Yes, it's useful, but the second chart below is going to be way more useful, and I'll show you why in a second. So again, this stuff has been pretty unchanged for weeks now. Gold's still bullish, dollar's still bullish, Nikkei's still bullish, US oil. So my point with this is, if you only look at this, and a lot of people do, a lot of people think that this is all you need to look at for COT. The problem with only looking at this, guys, is that if you only look at this, you're going to get a signal, sure, but it's going to be a bullish or bearish signal for the next 6 months, rather than something that actually is tradable in a shorter term basis. If you were bullish gold, it's been bullish gold for a year. So if you've been looking at gold price, you've seen it's been in downtrends like crazy for a year. So what I mean is that this data can be really, really more slow paced, and even perhaps more on the side of investing side. But when you go down to this portion of the chart, this is really, in my opinion, the cream of the crop, because check this out. This shows us the latest filing, the latest buys and sells, what they've been buying, what they've been selling as of the recent data. Okay, so let's dive into this report really quick and we'll get a bias. So Euro had a nice uptick. So keep a close eye on that. That actually makes me more bullish euro dollar. Silver, nice uptick. Dollar uptick here, 1.5. So that's a little interesting. The CAD, Bitcoins are SPX, Nikkei. Nikkei had the biggest at 12.69%. That's a huge swing. And then we can go take a look at our most bearish moves. Platinum, Swiss franc, NAS, kind of concerning. A 5% drop in basically, this column on the right is the one I always look at, guys. This is the net change column. It basically summarizes all this stuff here for you and just converts it into, hey, were they up or down in terms of sentiment? Were they bullish or bearish? And so what we can see is the top ones up here are USD and Euro, both pretty bullish this past week. And then if you take a look at the bottom, you got NASDAQ, Pound, pretty bearish, Swiss franc, Kiwi, Yen, and Aussie. So little concerning there. And everybody wants to know about gold. So gold also kind of a bearish week last week. So what do you take with that? How do you trade based off of that? Well, the idea would be when we go over to the top setups algorithm, we can see the summarized view. And so this summarized view basically shows us all of the different metrics that the Edge Finder uses to score a setup or something like that. So COT bias, you can see what we just looked at. There's an automatic column that is computing bullish or bearish for each asset on your behalf really quick. Take a look at retail sentiment. We haven't even looked at that today, but retail sentiment shows us what retail traders are positioned in. Are they bullish or bearish on the dollar, yen, whatever? And it gives us a contrarian indicator. So just to show you that while we're on the topic, if we go to this page, you can see, like, for example, we're actually getting a bearish signal on dollar Swiss because retail traders are 87% long. So if we know retail traders who lose money historically, if they are super bullish on something, then the bias would be more bearish. And you'll see that reflected in the top setups algorithm over here. We can do the same thing for each one of these. And it even does fundamental analysis, economic data like GDP and PMIs, inflation statistics, labor market statistics, and interest rates. So right now you can see there is our final output for possible setups to look for going into this next week. By the way, guys, the Edge Finder is currently, actually, check this out. I got a nice fancy one for you. A nice 40% off Black Friday special. Thanks to Julie for putting together this little space-themed Black Friday theme. I thought it was pretty cool. Again, if you use code YTVIP using the link down below in the description, you can purchase a copy of our software for 40% off right now. That is a massive discount off of the price of the tool. It will save you hundreds of dollars. And if you're serious about this stuff and you want to have this data on your own screen whenever you want it, click through it however you like, take advantage, get a copy. We've worked for about a year and a half, almost getting close to 2 years, not quite 2 years, but a year and a half as a software team to build what you're seeing on the screen. And if that seems like it would be something to help your trading, as it has helped many other traders, we highly encourage you to get a copy during this Black Friday sale. And again, it is going to be your best price of the entire year, so don't miss out on it. So yeah, in terms of the next charts that I want to look at, so we've gone through the dollar. I've covered my positions. You can see that there's a US oil bearish setup here. I actually did pick up a position in USO. This is US oil, of course, and it is just an ETF that tracks US oil. But what you can see here is I shorted as price started coming up to this 50% retracement. And so far, the idea here is that we're in a nice downward trend overall. And again, if we take a look at COT bias, slightly bearish for the US oil, you can see retail sentiment. Traders are bullish, so I'm kind of trying to be a little bit more on the bearish side. Seasonally, it's not going great for us. Trend, still kind of in a downward trend, so that's nice for our bearish read. Actually, I'm sorry, seasonality is going great for us because it's seasonally expecting to get it bearish. I said that incorrectly. If you don't know about the seasonality tab, it is basically this tab right here. You can select any different chart you'd like, and you can take a look at seasonally what we may expect in terms of bullishness or bearishness. So the last 10 years, oil's been bearish during the months of November, December, and January. So we're kind of entering into a bearish season. So I am going to stay on the sell side primarily based on that. And it is, again, automatically calculated into the algorithm over here. So you can see there's our bearish seasonality stuff. So that's what I'm looking for in terms of oil. If price does break above the 61.8, that's going to be my signal to go ahead and stop the trade, perhaps try at a better price. But so far, that is the idea, and we'll see how that one wants to play out. Let's take a look at gold now for the gold traders out there. Gold has been on a bullish run here, and I think is set to continue. I've pointed this out, but a possible pullback could be really interesting. If you draw from fib low here to fib high up here, we get our three levels on the Fibonacci retracements, the 38, the 38.2, the 50%, the 61.8. As price pulls back to this area, it could be kind of interesting for another bounce and leg higher to finally retest this 2000 level. Well, this is not the 2000 level, but you see what I'm saying. The 2000 level is up here to here, so this zone here that we've seen resistance previously. I think price wants to go back and retest those areas. Perhaps it gives you that pullback opportunity. In my opinion, that would be an area of interest. We'll see if that one plays out. But the idea would be a move back to the previous high here. And really, I think that it's probably fair to say in 2024, with the Fed changing and potentially even pivoting into new year to start even looking at rate cuts and stuff like that, I think that there's this opportunity with gold that we may see a return back to the all-time highs, as the dollar very much could kind of weaken. So if you look, this red zone, this is the all-time high zone, right? So as you can see, prices finding a low here. It does look like on a higher time frame basis that it wants to kind of squeeze back to the previous highs. Pulling back and finding support in this area here recently showed, you know, bulls are still very much aware. They're still awake. And I think that especially with the dollar index weakening, based on my bias at the beginning of this video, I think gold has more room to the upside. That's my personal opinion. We'll see if I'm right about that. And also you can draw some fibs here from the swing low to the swing high. It also gives you a nice confirmation of two Fibonacci retracement levels, the 61.8 and the 38.2 from the longer term. They line up very nicely. And honestly, that makes for an even sweeter possible entry in my personal opinion. So let's keep going. We'll take a look now at the Euro USD. Let's pull that up. So here's the Euro dollar. Actually, let's just do the OANDA version. Okay, so Euro dollar, look how strong it looks. And again, remember that COT data looked bullish, but we're not quite getting a huge reading on the edge finder. We can actually include all the neutrals just to see the other charts. And where's that Euro dollar? There it is, -2. So it's getting like a neutral reading. So although I really like the chart, I'm not a huge fan of this at this current level. If you get perhaps a pullback, it could be a little more interesting. You found support here around that 1.083 level. And now retesting this kind of target. This was our short-term target, by the way, for where we thought the euro dollar move could go. It very much did happen, and so that's been awesome. I think that, you know, the bulls are still in charge here. They're still in control. If you draw in longer-term trend lines, probably do, like I said, for a bit more of a retracement, and perhaps even just to go sideways here a little bit. But not really a trade setup that I can immediately take by any means. So nothing quite ready there. Let's take a look at GJ, not a chart I look too often on, but when it's setting up on the edge finder as a +6, it kind of has my attention. And I talked about this briefly last week. This one pulled back real quick and I missed the entry. I wasn't even looking at pound yen when this happened, but you can see overall upward trend. Yes, you get a big drop, but sometimes you get these big drops and bulls just, if they're there, and they just punch it. And they seemingly have done that. The question will be now, can it make a return back to the highs? I think, like I said, this zone was a bullish area for me. I had it all marked up. I didn't catch that entry, but if you do get some sort of intraday kind of pullback, there's a chance I may actually even enter that trade. And again, anticipating that we could see a return back to those highs. So we'll watch that. Pound yen, really interesting chart and getting a nice reading overall from the edge finder. So I like that a lot. Pound CAD, this is another trade I am in. I'll show you guys pound CAD, OANDA. So let me see if I can get this one marked up for you. Okay guys, so this is my pound CAD trade that I'm currently still in, and I'll show you this. Inside of the group, I took this trade, let's see, when did I first took it actually 11:15. So it's been 4 days now since I initially entered this position. So this is what the signal was sent out to the group looked like. So I went long here and still going kind of consistently with my oil bearish thesis, basically looking to be bearish on the CAD. So I went long pound, short CAD basically. And it also had that edge finder confirmation. I'm still in that trade, and this is the latest update. So I trailed stops here just below this little structure low here that we formed. And now the goal is to see if this one wants to keep running, because if it does want to keep running, I think we see a return back to the highs. And if we're able to break that, my goal will be to trail stops further into profit and reduce my risk further. So this is another really hot trade for me. I also traded Aussie yen, which went really well as well. So Aussie yen, I did get trailed out here for a profit. So I trailed my stop up here below market structure. And I'm happy with the way that trade played out. We've been on a really hot streak, to be completely honest. I know it looks like I'm only showing you winners right now, but to be completely honest, I only have had winners for the last like week and a half. It's been nice. Is it always like that? No, I wish. But it's been really, really good. And we're on a hot streak and plan to continue trading the way we've been doing for the rest of the year. So again, that reminder, I mentioned it earlier, but that VIP is currently 40% off if you'd like to join us. You can also get a copy of the Edge Finder for our 40% off Black Friday sale. And with that said, thank you guys very much for watching the video. I hope that this was helpful to you and prepping you for the week ahead, and I hope you have a great rest of your day.